Now it's time to prepare like a pilot for our first solo flight. Now that we have the 3 criteria for our entry signal under our belt, we may be super excited and want to get into trading right away. But just like a pilot, now we have to get ready for every emergency situation that we might face before we take off on our first solo flight. Just as a pilot has to know how to take off and how to land and all of the emergencies they might face along the way, so must we as traders. And I refer to this as the 5 stages of the trade. In brief, the 5 stages are: stage 1 is we identify the trade and we get everything ready that we need. Stage 2 happens when that trade is triggered and we've just entered the trade. Stage 3 is marked when we have our stop loss up above our entry and we've finished managing risk, and now the job is up to the market. Stage 4 of the trade is the part that most people overlook, and this is the one that pros use all the time, and this is adding on to successful trades. Stage 5 of the trade is where the trade is closed and we're finished the trade. And yet that's not the end. Tracking your trades, whether they're profitable or they're losers, is important for improving our trades in the future and for tracking what we have to pay for taxes. And for my own part, I use cointracking.co. I'll talk a lot more about cointracking.co in a future video. Let's start off by taking a quick look at each stage of the trade, then we'll dig in for some more detail. The first stage of the trade occurs before the trade is executed. In stage 1 of the trade, we're focused on identifying the chart patterns that may set up and turn into our signal. That is, we're looking for a chart pattern where our trading signal is almost setting up. And that's the point where we get our entry level, our stop loss level, and our profit targets all identified before we put on the trade. The second stage of the trade. The second stage of the trade occurs when our trade is triggered and we are now in the position. And this is the most important phase of the trade. The approach you use right now is going to set the stage for all of your success or failure in trading. This is the most common place for the biggest errors in trading, and it's the very spot to protect yourself against those big losses. The third phase of the trade. The third stage or phase of the trade is the process of getting our stop loss up above our entry to completely manage the risk. The trades that make it past this stage of the trade are going to be our biggest money makers, and in fact, we don't want to hold anything else. The fourth stage or phase of the trade. The fourth phase of the trade doesn't necessarily occur in every trade, but this is where the big money is made in all of the best trades. You can bet that the biggest money-making trades that the pros will brag about employed this stage of the trade. The fifth stage of the trade. The fifth and final stage of the trade is when we exit and close the trade. Over the years of working with thousands of different traders from all over the world, this is what I hear is the most common difficulty for most traders, is when to take profit or when to close the trade and take your losses. By having stage 5 planned clearly in advance, you know exactly when to take your profits and you know exactly when to get out of losing trades. And the more we practice getting out of the trade at the right time, the more consistently profitable our trading can become.